Are you worried about recession destroying your portfolio? In the times of turmoil, people worry about their investment money, financial futures. Let's buy some companies which can bring about that stability. These companies are part of group of recession-proof stocks to help you ride out the rockiness of recession. Let's begin. Walmart. Walmart is that company everyone knows about it. They have the low prices and everything people may want in the world. When a recession hits, Walmart tends to do better. This is because their prices are low and therefore people would prefer to shop there. It saves them money and they live happy to be on a budget. During the crash in March of 2020, Walmart's stock price only dropped by 2%. Since the bottom of the crash, it has risen over 27%. They also pay dividend and people will continue to shop there. Okay, now let's move on to the second one, which is Target. Target is an excellent version of Walmart. The staff is kind, the prices are reasonable, and you have a better feeling of shopping there. Target, like Walmart, bet the recession of 2008, and now they have put in work into their online presence as well. The S&P 500 fell over 31% in March of 2020, but Target only fell by 28%, and they risen by 151%. People still need things, and they still shop at Target. So this is an excellent recession-proof stock. Okay, now let's move on to the third one, PepsiCo. We often hear about Coca-Cola, but PepsiCo have set up to do well in a recession. When people do not have a lot of money, they'll cut back on many things. Buying soft drinks is probably one of them. However, PepsiCo is not just soft drink company. They also own the Fritos, Lay's, which give them more considerable margin. And one other item that took off was their cocktail mixers. As people were stuck at home, they no longer could go to bars, so cocktail mixers sold by PepsiCo rose by 36% in 2020 alone. As a shareholder, you will also be pleased to know that PepsiCo has consistently raised its dividends. Great. So now let's move on to our fourth stock, Lowe's. Due to recessions, people are more likely to start doing more do-it-yourself projects at home. This gives big box stores and hardware stores more business. The pandemic has caused many people to be stuck at home, and as a result, home projects increased for households. The revenue for Lowe's rose by 23% in the first 9 months of 2020. And by 2020, online sales bloomed by 106%. And as a shareholder, we will all be happy with their dividends as well. And they continue to increase its dividend every year for the last 32 years. Let's move on to our fifth stock in limelight, which is McDonald's. With less money in people's pocket, they stop going out to eat. At this point, people are looking for cheaper options like McDonald's. Also, it would be interesting to know that their dividend has also continued to increase every year for the last 32 years. The next one would be Costco. You will get more for your money buying things in bulk at Costco. Costco sale grew by 9% in 2020, operating income increased by 19%, and their e-commerce is bringing a massive surge in their sales numbers as well. Their stock price only fell 8% during the crash, and they grew over 35% back. Costco is certainly a stock for you if you're looking for being recession-proof. People will continue to try and save money and buy in bulk, and Costco has been working on its online presence to help them in the long run. The next stock that we have is Nike. Nike is restored while another recession hit last year. Sales in the last year soared 141% in North America alone. Moreover, the revenue has gone up by 96% since a year ago. This is a stock that has stayed consistent throughout the pandemic. Number 8 would be Procter Gamble. Procter Gamble is a dividend king. They have raised their dividends each year for the last 64 years straight. When a bull market is soaring, most people are going after all the growth stock. But these blue chip dividend stocks come out shining as a recession hits, and that would be Procter Gamble. They make the products we use every day, like Head and Shoulders, toothpaste, tampons, and many other everyday products. And this is considered a dream for dividend investors. Let's move on to the next one, Amazon. It's one of the best recession-proof stock. Amazon is a massive company. It has survived 3 recessions and came out on top as well. As recession happens, Amazon thinks about the way to do things better. With significant diversification in the cash flow, Amazon has set itself to withstand any recession. Loyalty is enormous with Amazon. It has been with Prime membership that retention rates of 1 year are 93%. For accounts that have Prime for more than 2 years, the retention rate is close to 98, which is amazing. As an investor, you must look at what happens in the economic downturn. If the growth were to stall for Amazon, they would have enough cash flow and options for the diversification to keep them afloat in any recessions. This covers our top 9 stocks for a recession-proof portfolio. Hope you guys like this video. If so, please don't forget to share, like and subscribe. For more videos, leave us a comment down below. Thank you and have a wonderful day.